The U.S. Treasury Secretary just announced that the U.S. will be investing heavily in digital assets. Take a moment to process that. The Treasury, not the SEC or the CFTC, just the Treasury. And this news came just a day after the biggest crypto asset sale in months. There is something happening here. In this video, I'm going to explain what is really going on behind the scenes, what this means for XRP, and if this market crash was a setup for one of the biggest turnarounds we have seen all year. I'm not telling you what to do with your money. Okay, let's do this. At this moment in history, the short-term changes are making everyone forget about the market's long-term direction. The drop is what the media are talking about. But what really matters is that this action was taken less than a day before a U.S. Treasury official said that the U.S. plans to take a major part in the world of digital assets. It's not an accident. That is positioning. This is the point where things become truly fascinating. It looks a lot like a classic reset moment when traders who have borrowed too much money are flushed out right before big news hits. This is because of the timing of the sell-off and the positive government talk about it. And I said this yesterday, if there was a quick rebound from that crash, the market direction would be clear to us. Today, the revival is beginning to come alive. But price movement isn't the only thing that matters here. It's the situation. This whole drop happened after Trump's announcement about tariffs. Many people didn't realize what that really meant. The market's computers saw the tariff news as a risk event and quickly sold off crypto and other risk-on assets. People weren't manually dumping XRP. It was banks, bots, and risk models that moved the money so fast. You can see almost like a domino effect. When crypto prices drop, it leads to a lot of liquidations and risk models are triggered. But when you look at the big picture, it doesn't make any sense at all. Why would a tax on goods coming from other countries make the digital asset market crash? It wouldn't unless something much bigger was happening that we didn't know about. This is why the next event is important. In less than a day, Scott Bent, the head of the U.S. Treasury, speaks out and says that the U.S. will be going big on digital assets. Consider it. You wouldn't say that unless the government was already getting ready for nationwide use, not just control. And that's the most important thing that sets this apart. The SEC has been talking about letting retail access, ETFs, and trading platforms. The Treasury, on the other hand, doesn't deal with market speculation. They work with financial networks, infrastructure, and processes around the world. When they arrive, it marks a change from guessing to usefulness. And that's just what this place needed. After all, blockchain is only worth what the people using it are willing to pay for it. This Treasury story is what we were talking about before. The most important question about digital assets wasn't whether or not they could work. The question was if the system would let them work. The technology has been in developers' hands for years. Ripple, Stellar, and Algorand have all been used in the real world. What it needed, though, was approval from the top. The proof just came through. When the Treasury says that the U.S. will be a big player in digital assets, it is telling companies, banks, and even other governments that this technology is no longer just for a small group of people. It is infrastructure. It's the framework for the next banking system. And you know what? People need to be able to use those rails to send money quickly, settle transactions, and find methods for international payments that actually work. That's exactly what XRP was made for. Now, let's make some connections. When there was another tariff-related sell-off in the Trump era, the crypto market also went down but quickly recovered a few weeks after. And that's easy to explain. Fundamentals don't cause these sell-offs. They are motivated by short-term trading thinking that is not interested in long-term technology adoption. After that, the people who really are investors and know what will happen next get involved while all of the other people worry. And this is the really powerful thing about that time. The U.S. isn't just getting used to digital goods. They are getting ready to use them. This means that partnerships, pilot projects, and regulatory clarity are all about to speed up. When you see both the Treasury and the SEC involved, it means that people who work for both organizations are working together. The change is no longer about whether or not to permit cryptocurrency. It's about how quickly we can make this work. That's why so many people see this dip as a mistake, just a technical flush before a structural recovery. If you've been paying attention to XRP for a while, you know what to expect. During the last tariff scare, before the SEC decision, and before every big XRP reversal, it was the same story. If you keep an eye on the order books now, you'll see something cool. Volume buy is slowly returning. The big funds that weren't active over the weekend are starting to gain more coins again. That shows you that the people who know what they're doing with money aren't concerned about taxes. They are looking at what the Treasury just said and are realizing the long-term effects of it. Let's discuss that way. When the Treasury starts to see digital assets as a strategic goal, it isn't just talk meant to last a short time. That means there is competition around the world. In other words, the U.S. wants to make sure it stays ahead of Asia and the Middle East as they develop CBDCs and tokenized settlement networks. Now, XRP's framework is very important. This blockchain is special and different. It's one of the only ledgers that has been intended from the very beginning for quick, compliant, and regulated settlement. It gives institutions what they really want: control, safety, and reliability. Ethereum doesn't have that to offer. That isn't something Solana can provide. Ripple has been working to meet those needs for years, not to meet the needs of individual speculators, but to meet the needs of institutions. That's why I keep saying that we are moving from a phase of speculation to a phase of usefulness. People will always guess. And yes, it can quickly raise prices, but when usefulness and approval come together, that's when the real explosion happens. When banks, governments, and businesses start to really use these networks, the liquidity gets deeper, the velocity speeds up, and the real demand starts to set the price. That's what this message from the Treasury is all about. It's the first step toward getting the general public to realize that these networks are needed, not just wanted. Look at it like this. We've had the tech for a long time, but it's like having a top-of-the-line smartphone from before cell towers were invented. The XRP system has super fast transaction speeds and almost no fees. But it could only be used by a certain amount of people until it was agreed that governments and institutions would use it and infrastructure would support it. Now that the green light has come, there are no more limits on adoption. This is a very big moment for that reason. The Treasury is basically saying that it's time to start building, and that makes a big difference in the world of digital assets, especially for networks like XRP that have been hoping for this kind of approval. We're at the point where people go from not believing to realizing that these systems are the backbone of the next generation of banking and not just ideas or ways to trade. The price hasn't shown that yet, but the work being done now will make it happen in the future. Because once you have support from the top, from governments, organizations, and regulators, everything is possible. And once one big U.S. organization officially adopts or tests XRP-based payment, the rest will follow. That's how it works in social psychology. And at this moment, that setup is coming together in the same way it has in every previous early stage change. Quick, silent, and not thought of highly enough. There is a big change happening right now in how value is transferred, and not many people are aware of how big it is. Most buyers make one big mistake. They think digital assets are just another type of asset. They are not those things. They are the basic skeleton that supports everything. When the Treasury starts getting involved, it means that these assets are being thought of as part of the next generation of the financial system's backbone, just like SWIFT, FedWire, or ACH were in the past. So let's go over this step by step. Scott Bent from the Treasury's statement that the U.S. would be going big on digital assets was not something said just to make conversation. You see that kind of comment before big changes happen in institutions. The United States doesn't change with short, catchy phrases. It changes through policy, unity, and action. And talk like this always comes before those things. That's how they get markets ready. For the last few years, there has been a struggle between the SEC, which thinks that crypto is a speculative market, and the Treasury, which thinks that it could be a useful national tool. It's important that they're different. The SEC has always taken a small method by overseeing exchanges, tokens, and investors. The Treasury takes a big picture view: infrastructure, payments, reserves, and activities across borders. When the U.S. Department of the Treasury talks about digital assets, they are talking about scale. Also, XRP has always been made to work on a larger scale. Now let's link this to what's going on around the world. The MyCA system is already making things clearer for institutional use in Europe. In Asia, there is a lot more use of blockchain technology, especially for cross-border payments and tokenized real-world assets. The Middle East is building digital banks that will use blockchain technology from the very beginning. The U.S. can't afford to be behind everyone else when it comes to moving value online, since every area is getting ready for it. This is a very important moment for that reason. It's the turning point at which the U.S. understood that it needed to compete instead of just regulating, and to compete, it has to use existing networks that are already working. This is the point where XRP's style stands out from the rest. From the very beginning, Ripple built this to handle the flow of big money, quick, safe, and in line with the law. It's what banks, governments, and financial companies really need. Utility is what we need to talk about. XRP is useful in real life, not just in theory. It has already been tried in places like the Philippines, Mexico, and Japan. These pilots have shown the system's capabilities in the real world. Right away, smooth moves between countries. But those were just the first cases. Here's an example of what can be done when the rails are set up. Now think about how to make that system work on a larger scale at the base level. National and cross-national networks backed by the government. That's the point where everything changes. Because by then, you aren't just dealing with retail or guessing longer. You have access to a lot of cash, like an institution would. From one central bank to another, from one multinational company to another. That's when XRP's true market value becomes important. And to get a sense of how this might play out, you need to know what happens when something is adopted by an organization. It's not done in a day. It is done by validation, regulation, and gradual spread. The technology must be safe, the partners must be checked, and the compliance system must be unbreakable. And that's exactly what has been going on behind the scenes for the past 2 years, while most of the retail market has been sidetracked by changing prices. Ripple was quietly getting licenses, joining ISO 2022 working groups, and building corridors that connect directly to current financial rails while everyone was watching charts. You can't build those things in a short amount of time, and you certainly don't do it if you think the government will make the technology illegal. That's why the word from the Treasury is so important. It backs up the idea that these systems are permanent and not just stay but get bigger. Interoperability is one of the most forgotten aspects of this puzzle. One blockchain won't control all of finance's future. It will be a network of tools that are linked together. This means that the ledgers that are easiest to use with existing systems will be the most successful. That's already what XRP does. Because of how it was designed, it can bridge currencies, tokenize assets, and settle deals between networks that are very different from each other. That's just what schools want. A thing that can link all the other things. We should also take a moment to discuss market behavior. A huge liquidation, like the one we just had, is usually not the result of private investors losing their heads. This is just the algorithmic trading systems and institutional hedging tools working as they are designed to do. In the same way that computers make purchases when risk levels drop, they also make sales when volatility increases. That's why we often see quick returns after conditions have been oversold. And now it's even more interesting because the Treasury story in the macro backdrop is the opposite of the bearish sentiment. That's why I said before that this is probably a market misreaction. The basics haven't changed for the worse. They've actually gotten better. The people who know that are the ones slowly buying back in, but the rest of the market is too scared to do anything. The on-chain data already shows it. There is again an increase in wallet activity from accounts that are of professional quality. That's smart money moving into place before the policy becomes clear. How often cash is rotated is another thing to think about. When traditional markets are affected by global tensions, tariffs, and changes in monetary policy, capital is always on the lookout for new safe havens. That was gold before. Now, digital assets are the best way to protect wealth, especially those that are linked to real-world usefulness and the possibility of widespread use. For this reason, the discussion has changed a lot from which coin will rise to which network will support the next age of money. And that is why XRP's focus on enterprise-grade usefulness is important. It's one of the very few networks that are built from the top down rather than from the bottom up. Ripple focused on institutions while others focused on the shopping hype. Clients like these don't follow trends. They make them. These players move billions, not just thousands. And when they do, it's for a long time. Let's look at the bigger picture. The US has just said that it wants to be a world leader in digital assets. In other words, it's time to stop acting like cryptocurrency is just a small-scale test. It's about to reach the point where real systems, government programs, and banks start to come together. Any time in the past that new technology was introduced, like trains, the internet, or telecommunications, the people who got in early before everyone else did were the ones who saw the biggest benefits. Timing is important for that reason. You can't wait until the machinery is all in place, or else you'll miss out on the big advantage that isn't fair to everyone. You need to get a handle on what's coming before the general public does. And at this moment, it's clear that the next step is to bring it into the world of work and school and have the government support it too. There is also a deeper change in philosophy going on here. The U.S. financial system has depended on centralized middlemen who move value slowly and ineffectively for decades. But digital assets are changing the way things work. Direct payment, programmable value, and instant cross-border movement are all things they allow. When the Treasury gets involved, it doesn't just mean adoption, it means change. They're realizing that this technology can make the U.S. banking system faster, safer, and more competitive with other countries. And keep in mind that when the Treasury accepts digital assets, it creates a ripple effect in all parts of the business. Banks change, payment processors update, and fintech companies merge. Liquidity sources are needed for each of those steps, and that's why utility tokens like XRP are so important. They're not just assets. They're the thing that holds the new system together so that it can work. When you look at everything together, it is clear that the events of the past week were not the beginning of a falling market. It was the last major change before a permanent decision was made. The charts might be unstable, but the basics show that things are in line. This isn't the first time we've seen this trend. For a short time, fear is hidden. For a long time, fear has turned into a chance. Before the 2017 run, the 2021 cycle, and every other big change in the history of crypto, the same thing happened. In every case, the triggers came from the top. Regulatory clarity, the ability for institutions to participate, and global unity. Now, it's happening again, but this time, it's even bigger, and this time, it's not about guesswork pushing progress, it's progress pushing acceptance. The guess-based stage raised people's knowledge of the issue. The utility part makes things last. And from the very start, XRP has been designed for this exact stage. As the Treasury shows that it is ready, as organizations look for compliant rails, and as liquidity starts to move back into utility-based networks, we are seeing the real-time building of the next global financial system. Most people won't notice until the prices change, but it'll be too late to do anything about it by then. The change that is happening now is bigger than any market trend. It's not about a single coin or a single event that causes change. It's about the whole system of money changing so that it is first designed for digital use. Just like the internet changed how we use knowledge, blockchain is changing how we use value. And when the U.S. Treasury gets involved, it doesn't just confirm things, it speeds them up. As we speak, the lines between traditional banking and digital assets are becoming less clear. Tokenization is being looked into by all of the big banks and banking companies. It's not speculation for BlackRock, Fidelity, and JP Morgan. They're growing. They are turning money market funds, stocks, and assets from the real world into tokens. What do all of these token-based platforms need? A neutral bridge is a way to move value easily between different institutions, currencies, and groups. XRP was intended to be that bridge. Ripple's plan was based on infrastructure, not talk, which made people underestimate it for a long time. Ripple wasn't trying to get a lot of people to buy its products. Instead, it was quietly building the infrastructure needed for big settlements. This is the same plan Amazon used in the early 2000s when it built its cloud computing system long before the market had a grasp on the idea. The payoff came later, when the whole world realized Amazon Web Services was running half of the internet. Ripple is making something like that to help with sending money. Here's the amazing part. The groundwork was already laid. The partnerships, the compliance system, the corridors, they're not theories, they're real. Up until now, there was no government approval. As soon as the Treasury said that, the last puzzle piece was found. That was the sign that organizations have been looking for. They needed to be sure that the U.S. would back digital asset integration instead of being against it. Now that we have that promise, we can move on to the next stage. At first, adoption will not look very strong, but it will gradually grow into a powerful trend. It will appear calm. It will begin with pilot projects, tests across borders, and connections to private networks. But don't be fooled. Those little moves add up quickly. When you mix regulatory green lights with institutional scale and infrastructure that's already in place, things can go into high gear in months, not years. And XRP is in the best position to take advantage of that. It was quick, it was compliant, and it was tried in the real world. XRP is one of the few workable choices whenever a government or organization needs a bridge asset that won't mess up its compliance or payment rules. XRP is all about making different digital systems work together. So if you see words like digital infrastructure, settlement layer, or interoperability framework in Treasury and IMF reports, you should take notice. There are signs that these systems are being discussed. Now let's talk about the mental change that the market is experiencing. Stories have shaped digital assets for more than 10 years. Bitcoin's shortage, Ethereum's new ideas, and Solana's quickness. But the next step isn't about story, it's about what needs to be done. Countries are turning their value processes into data. Companies are starting to use tokenized goods. Central banks are trying out central bank digital currencies, CBDCs. A neutral city layer that can link all of those projects together is needed for each one of them. That's where the XRP ledger is, quietly waiting to grow. There is always the same trend if you look at every big technological revolution in history. At first there is disbelief, then there is slow recognition, and finally there is fast acceleration once everyone starts to use it. We are in the middle of speed up and acknowledgement right now. Most people still don't know how much this has moved. But once governments start talking to the public about it, the progress can't be stopped. This is the reason the news from the Treasury was so important. It was about authority, not price. It was the moment when digital assets went from being a risky idea to a part of the country's plan. And when the world's largest economy sees something as a strategic priority, everyone else takes suit. The short-term changes don't matter anymore. The basic direction is now set. People are working on the rails, the organizations are coming together, and the rules are being updated. The next global banking system is being born, but nobody is talking about it. One that is quicker, has no limits, and is much more effective than any previous version. XRP's place in that system is now a reality. It makes sense. It was made to be fast, cheap, and able to work with other systems. Everything that the present banking system is in dire need of. As the IMF, the Treasury, and the private sector all come together with the same goals, it is clear that we are entering a time when the XRP ledger will be one of the main ways to connect global cash. Every wave of innovation has a key feature that makes it stand out and is closely linked to the changes it brings about. XRP could very well be the asset that takes part in the digital asset change. Since that's not what it's designed for, it's made to be useful. And that usefulness is what the top levels of global banking are agreeing with right now. So as the US moves from observation to implementation, we're hitting the stage where all the work of the past 10 years will start to pay off. It won't happen in one go, but once it starts, it can't be stopped. The market will come to terms with the truth that institutions, treasuries, and central banks have already seen. Blockchain technology isn't what lies ahead.